Well, we're just getting the numbers in, and it looks like we're pretty much spot on. The economist forecasts CPI on a month-over-month basis up 0.1, the core up 0.2, which puts us at 3.4% for year-over-year on the headline, and for the core, 2.5%. Both of those a tick lower than they had been. Let's take a look at some of the categories here that we have seen move. Food up 0.1%. That's down from 0.2 in June. It is also food at home decreasing 0.1%. Energy decreased 1.5% in July after falling 5.7% in June. The gasoline index down 2.9%. So there is the war effect. The memorandum of understanding did send gasoline prices down for a while, so the averages worked out. In terms of the core, owner's equivalent rent, 0.3%. Now, that is higher than it has been, and the lodging away from home index down 2.8%. So we're seeing some areas in which there is still inflation. We're going to have to check the super core number, which I'll see if I can pull up here very quickly if it has been updated. Not yet, but I'll get that for you in just a second. That's what the hawks on the Fed are looking at.
Mike, we'll let you take a couple minutes to look at that. Thank you so much. Let's take a look at what's going on in markets in response to this. Not a huge change, although people marginally pricing out some of the rate hike probability for September. You're seeing now 30-year yields continue with the decline. At the front of the yield curve, also withholding some of the shift. You're seeing 2-year yields continue declining as well, but just down now basis points, 4.2%. This, to me, really indicates, yes, nothing has really changed, but to the degree that this would have given a disinflationary surprise that would have caused some sort of flushing out in the short positions, not necessarily the clearing event. If you take a look at what's going on in equities, also seeing the same kind of positivity, not really a game changer considering the fact that this is exactly in line. That said, not necessarily a hot print, giving a little bit more of a rise to the tech wager, 0.9% rise for S&P, for NASDAQ futures. And then when you take a look going forward, the key to me is going to be some of the core PCE factors, given the fact that ultimately it's now kind of a wash when it comes to the overall averages.
This is in line, bang in line. So pretty much what the market was expecting. Maybe some individuals thought we would even see a softer print. Shelter costs, interesting, seeing that headline come through, rose 0.1%, accounting for 2/3 of the overall increase. This is going to be, quite frankly, a very big political issue, but you can see that is one of the biggest drivers when it comes to what is making up the inflation print today.